Ride-hailing apps have become your everything. Your driver, your food delivery, your exposure to full-volume underground German house music. But here's the thing, it might go away forever. They're beginning to collapse, and it's showing us the truth. Uber hasn't turned a profit in its 13-year history, which might not be the biggest surprise because back in 2019, the company literally said there's a chance it may never make money. But that didn't stop investors from throwing endless piles of cash at it, giving it an $80 billion valuation. 3 years later, the company still hasn't turned a profit. Its value dropped by half. And it just got much worse. Leaked internal documents are now showing us the gruesome reality behind what seemed like a simple app to use when you want to pay someone to get you a bagel. Combine this with rising fuel and labor costs, and the future looks far from certain for Uber customers, investors, and drivers. At launch in 2009, Uber called itself a ride-sharing app. The pitch was anyone can afford a private driver if you share the driver and their car. But it quickly turned into a modern taxi service. Right away, Uber had a secret to its success. It dramatically reduced the cost to become a cab driver, which was huge. In most cities, to operate a taxi, you need to pay for a medallion or a taxi license. They're limited, and boy, can they get expensive. This all meant that Uber drivers were able to work for less money than taxi drivers, and savings would ideally pass on to the customer. It was an unstoppable business model, and within a decade, it took over the world.
That's what technology does nowadays, baby. There are no limits when it comes to Uber.
But building a better taxi service wasn't the only thing Uber did to conquer the cab industry. We now know a lot more about Uber's strategy thanks to this guy, Mark McGann, a former Uber exec who recently leaked 124,000 internal company documents. It ain't pretty. As the business expanded all around the world, Uber reps cozied up to government officials, influential billionaires, oligarchs, and media moguls. They were bold. They'd enter markets knowing their unlicensed taxi service was illegal, or f***ing illegal, as one Uber exec put it in a leaked email. Their plan was very simple though, set up shop in a new city and see what happens. What typically happened was what McGann called a shitstorm. Uber execs started calling their business model, get this, the pyramid of shit. A pyramid built on a base of driver lawsuits on the bottom, investigations by regulators in the middle, and harassment allegations on top. More on that later. But despite being built with dookie, things just always seemed to work out for Uber. They would enter a city and almost always become legalized in one way or another. It turns out Uber put those billions from early investors to good use. They built a network of connections with the world's rich and powerful. Here is one example. In 2015, taxi drivers in France were livid. They protested against Uber's arrival, and things got a little bit heated. The local government partially suspended Uber's service as a result, so McGann from Uber got out his phone and texted a guy named Macron, the economy minister of France. He promised to, quote, look into this personally, and within hours, magically, the Uber suspension was revised. But a business getting buddy-buddy with government officials isn't all that surprising. It happens everywhere. What's more surprising is that Travis Kalanick, Uber's old CEO, tried to take advantage of violent protests for the company's gain. When angry cowies protested against the company, Kalanick and McGann talked about setting up counter-protests that would use, quote, civil disobedience to push for Uber's acceptance. In retrospect, it was sort of a weird idea. I mean, who's gonna show up to this protest? How do you get people to take to the streets demanding slightly cheaper cab fares? But Uber's bigwigs took this seriously. Kalanick even said, quote, I think it's worth it. Violence guarantees success. And little did Kalanick know, but his time as head of Uber was about to be cut short. The CEO was just growing too controversial. He took some heat for joining Trump's economic advisory panel, and the harassment scandals sure didn't help either. Not to mention, Kalanick was caught on camera in a pretty cringy argument with an Uber driver.
I lost $97,000 because of you. I bankrupt because of you. You keep changing every day.
Hold on a second. What have I changed about black? What have
You
I
changed the whole business.
What?
You dropped the prices.
On black?
Yes, you did.
Bullshit.
We started with $20.
Bullshit.
We started with $20.
You know what?
How much is the mile now? $2.75?
You know what?
What?
Some people don't like to take responsibility for
I
their
take
shit.
responsibility.
They blame everything
But
in
why
their
you
life on
sending an
somebody
email
else.
for town car?
Good luck.
Good luck to you too.
Somewhere in all this was his last straw, and Kalanick resigned as CEO in 2017. Enter Uber's new CEO. His first job was a big one, clean up the company's image. The new boss got rid of Kalanick's original 14 values for Uber, which included things like always be hustling and super pumped, which sounds more like what you see on the walls of a cheesy gym, not one of the biggest companies in the world. But either way, he replaced them with a set of 8 cultural norms that included things like we celebrate differences and we build globally, we live locally. And every time the new CEO appeared in public, he used the same catchphrase, we do the right thing. Today, Uber says the days of exploiting riots and jumping into markets without a plan are over. And when asked about the document leak, Uber says that's past behavior. It wants to be judged on what it does next. So how should we judge the Uber of today? Maybe the company really has turned over a new leaf. But that aside, they're facing another huge problem. Their long-term plan to turn a profit needs to be completely reworked. That's because Uber was banking on replacing its drivers with self-driving cars. Now this might seem like a sci-fi fantasy, but Uber was flush with cash and very, very serious about cracking this nut. They invested billions. The idea was if they could eliminate drivers, their profits would soar. Now, Uber was doing this all the while hiring new drivers and promising them pretty big money. It's sort of like the guy who tells his date he's looking for a serious relationship when really he's just looking for one thing: someone to play Smash Bros with. Remember how a few years back there was all this talk about driverless cars, how we're almost there? Well, here we are in 2022 and driverless cars still haven't really pulled out of the driveway. The tech has run into some problems that engineers are working on. As much as I want to see it happen, it might be a while. Uber's own project was involved in the first known death caused by a self-driving car. And believe it or not, this actually happened right outside my old moving company office in Tempe, Arizona. One of my workers was like, "Did you hear about the self-driving car that hit a lady like right there?" It was weird. And this is only the beginning of the driverless debacle because they later got sued by Waymo over stolen trade secrets. Waymo is a driverless car company that's owned by Alphabet or Google. In this long line of unfortunate events, one of Waymo's engineers stole blueprints, set up his own self-driving truck company, and sold that to Uber. This cost Uber $245 million to settle the lawsuit with Alphabet. The whole idea crumbled and Uber later sold its driverless car division to a Silicon Valley startup. The dream of a self-driving car fleet was over. It turned out Uber would have to depend on humans after all. So now it's like the guy who breaks up with his girlfriend but regrets it a few weeks later, like, "Hey, you know I was joking when I said I found someone better," right? But it turns out if you want to get back together, it's going to cost you. Am I right, fellas? Remember how Uber managed to defeat the taxi industry by making it cheap and easy for drivers to come on board? Well, now that process is running in reverse, because it's also cheap and easy for Uber drivers to bail on Uber. If you were a classic taxi driver and you spent serious money and time setting yourself up as a licensed cabbie, you wouldn't just bail on it in the first sign of trouble. But if you're an Uber driver, especially part-time, you'll leave the moment that you find something else that doesn't puke in your back seat. And that's what happened during the pandemic. Demand for Ubers dropped like a rock, so drivers went off to do other things. Not to mention driving strangers around during a pandemic seemed less than ideal. And now we have inflation. Car prices have soared. So they're stuck in this weird kind of catch-22. When there's fewer drivers on the road, the algorithm ups the price and that pushes some customers away. Fewer customers means fewer people who want to drive. So again, the price has to go up. This just on and on again in a vicious cycle. Uber fares in the US are up 45% in just a few years. So if you've been waiting longer for an Uber and paying more, this is why. Now the big question, does Uber have a fix for all this? Sort of. The company's diversifying. It started with delivery services. Uber Eats has been around since 2014, but during the pandemic, this was a lifesaver for the company. When lockdowns came, the ride-hailing business went poof. Revenues dropped by 2/3 and never fully recovered. But with everyone stuck at home, Uber Eats exploded. And in the 2 years since the pandemic began, its revenue has grown by 5x. And delivery isn't the only new business venture for Uber. It's jumping into logistics with an app that connects shippers with freight carriers. Plus, there's something else. What do you do if you're a digital company and you need a quick way to make your product profitable? You sell ads. Uber launched in-app ads on Uber Eats and is planning the same for its main app. That's on top of sponsored listings and selling physical billboard space. Maybe they'll even decide to put screens in the back of their vehicles and find clever ways to make us watch. All this diversification is good news for Uber and its investors, but it still has to make it through this epic stock price collapse. Its shares have been falling steadily. It's trading at half the price of its IPO. Plus, in bear markets, investors typically avoid growth stocks. These are businesses with a lot of promise, but not much profit. But still, Wall Street analysts haven't given up on it. They've downgraded their outlook for the company multiple times, but their targets for Uber's stock are still in the $40 to $50 range, way higher than the current price. So they see a major opportunity to buy, but that's if you think analysts are right. On the other hand, there's investors who question whether Uber will even exist a few years from now. The market's sort of in the middle on this. Uber stock is trading about halfway between analyst targets and zero. What we do know in all this is that in order to survive, Uber will have to get used to something that it didn't have much of in its early days: competition. Companies like Lyft and Ola have moved into Uber's ride-sharing business, and now it's competing with logistics companies, giant multinational ad agencies, and many other delivery services that are backed by big money. So the days of Uber being the only game in town are over, and future Uber could be a very different company from today's. It's even possible it'll leave your city completely. After all, this has happened before, and instead be the company that delivers your new TV, or maybe just the billboard advertising it. But if future Uber's more like this, and less like this, that's a good thing, right?